Good evening everyone, this is Srikanth Rajan and welcome back to Market Pulse video where we discuss about what happened in the market last week and what could be expected the upcoming weeks. So talking about the markets last week, it has seen a kind of slight bounce from where the market had fallen the previous week, and that is something that was expected. And do we call this a rally further? Well, that is something that we'll answer in this podcast. So as we go further, there are a few important things to be noted. So if you look at the last week we could see some positivity in the US market, majorly after Jerome Powell, who is none other than the chair of Federal Reserve in the US, which is the equivalent of RBI, the central bank in India. So he has actually come out and told that they are seeing some changes in the market, especially the inflation. They are seeing some decent correction in the inflation, which can actually lead them not to not to increase rates further. In fact, if you have seen earlier, many a times whenever the rate hike has actually happened, it has actually affected the economy overall very badly. But this time US has not seen such a bad situation, though of course a few small banks did fall off. But then they cannot keep the interest rates this high for a long period, because that is going to affect a lot of banks, and not only the banks, the overall economic structure. In fact, there was some jobs data which came in from the US which also suggested that the number of jobs have actually come down. So these are all things which is kind of giving a positive to the market at this point of time. Why positive, though the news is negative, is that people now expect the Federal Reserve not to increase the rates further. In fact, just imagine the situation. The interest rates on home loans have gone up really high. Naturally, the real estate market is down. Along with that, the automobile market would be down because the auto lending rates are also down. So I mean increased. So with all this, the economy is going to see some tightness, and that tightness is something which is experienced by US at this point of time, and this cannot continue for a long, because that is going to hit into a recession. Though US has not officially gone into a recession, Europe is one country which we can say probably it's already in recession. So definitely they would not want recession to come into US. So at this point of time, I don't see a reason why they should actually further increase the rates. They might keep the rates at the same level for a further longer time, and over a period of time slowly start to reduce the rates. So that could be expected. Now, at this point of time, let me tell you something very important. Majorly, most of the people who know something about the market and with some experience in the market, what they actually would do is, in such situation, is what they actually deploy more money into the market, because they expect that at some point of time the rate hikes will of course it stopped. It looks like it's already stopped, but it will stop and it will start coming down further, and that is when again the markets will see a boom. And that is a beautiful opportunity to make money, and that's exactly what a lot of people think, and that's exactly why people will start thinking of deploying funds into the market. Now that was about US. Now if you look at India that way has no problems. Our inflation is within control. That's fantastic. Rates are also within limits. I mean, it's okay, because our rates, we are used to home loans at 9-10% and car loans at around 9-10%. So that is kind of okay again. So India's market has not seen that downfall in the business at this point of time. So though the markets have not seen a major growth also, because the last year growth was phenomenal. This year has been a kind of a plus or minus, I would say, not a plus or minus, but a steady growth is what is seen in India at this point of time. So Indian markets are doing well. The only reason why Indian stock markets are not rising up is because of the continuous selling by the FIAs, the foreign institutionals. So when are the foreign institutions going to buy? That is a big question. Now see, one thing we need to note at this point of time, in spite of the country that being in trouble is US, the US dollar continues to grow higher in value. So in fact, last week I remember at some point of time, Indian rupee had hit a all-time high against dollar, which was something not great, because India being a developing country, many people look at moving funds to US dollar and gold when the markets are kind of jittery. So at this point of time, the institutionals in FIs also are not probably thinking of buying it in India. But then one thing is for clear, that by the time FIs come back to buy in India, Indian markets are already going to stay up because of this huge retail support in form of mutual funds, as well as the retail participation in the market. So these are all things which is going to lead the markets further higher. But then what will happen when the FII comes? That is the question. Now, coming to answer this question that we had put in the start, that is, have we missed an investment opportunity? I would say definitely no, because like I told you, that rate cut phase is yet to come. So that is a very important time. There you can see some rally in the market. Two, US markets are still in doldrums. So until the US markets give a strength or strong signal, Indian markets have a limit to rally. That is second point. Third, Indian elections are due. So that is going to hold the market for some more time. So with all this, only thing I have to tell you is, if you have still not invested, do it at least now, and rather than crying after the market has rallied up. When market starts rallying and the markets get into a bull mode, every Tom, Dick and Harry will come to invest in the market, and the markets will, or I would say that is the time when the markets actually peak out, and then we see a downtrend. So if you're a long-term investor, just go ahead and invest in a long-term basis with SIP mode. That could be in a mutual fund, that could be in an IAP, that could be even a AIF or a PMS. If you don't know what they are, of course, connect with us. I'll let you know the best of opportunities to invest in the equity market. And also, by the way, don't think that MPI Invest is just a equity market company, but we are a 360-degree wealth management company where we help you invest into bonds, real estate, gold, anything across where capital markets are involved. Of course, real estate, when I mean, is also via the capital market and not by buying physical real estate. So there are umpteen opportunities I believe in capital markets. The reason being simple: it is easier to diversify money in the capital market rather than buying a single property. So that's exactly why I said real estate also in the capital market form. So these are things that we are helping with. So we build your entire beautiful portfolio of wealth, and we ensure that it grows along with you so that you achieve your financial goals comfortably. So if you feel that you can do it all by yourself, of course you can do it. Only thing is, you'll have to dedicate about 10 to 20 hours of a day into your portfolio building, and ensure that you are focusing on that and watching that on daily basis without even focusing on a career. So do you really need to do that when there is somebody who can do it for you and absolutely free of cost? Do you need to do that? Yes, we don't charge a penny, and you just have to invest through us, and everything is taken care of by us. So this is the beautiful community that we have at MPI Invest. Of course, we will let you know more about it there are a few video series that's coming in our channel soon. So that's it for now. If you say for this week, okay, by the way, one important thing I forgot to talk about last week is, of course, the SBI results. So that is the most important, talk of the town at this point of time. SBI results have come mixed. I would say their profits have actually gone up. Asset quality has improved naturally thanks to the bad bank which was set up in India. So, their NPA is also kind of reduced slightly. But then very important thing is the home loan lending has actually reduced in SBI, which is not a great thing. You know why? Home loan and a car loan is actually given to the retail people like all of us, the middle class, upper middle class, and the lower middle class. Now, these are the people who pay back their loans on time. Yes, be proud about it. We are people who look at our credit score. We don't want to lose out on credit score. We want to pay our EMIs on time. And we are the people who give good returns and profitability to any banks in the market. But then if you look at SBI, banks like SBI, Punjab National Bank, these are banks which actually lend out huge money to corporates, and they are the one who make up all this majority chunk of non-performing assets, NPA. So if you look at HDFC Bank, HDFC for a bank, for example, has got a much lesser NPA compared to SBI, because HDFC Bank focuses on retail lending. So in case of SBI, if you see, their retail lending, or I would say specifically home loan lending, has come down, which is not a great thing, I would say. So if HDFC has an edge over SBI, I would definitely look at investing more in HDFC than SBI. Well, it's not a recommendation. Do your due diligence before investing, or of course, get in touch with a registered investment advisory. But very importantly, I feel more value in HDFC Bank at this point of time. Of course, there was a recent news where HDFC Bank has invested into Vodafone, but that is a small chunk, which is not even anything for HDFC Bank. So that is the benefit of HDFC Bank, because HDFC Bank, or rather most of the private banks, are people who focus on retail lending than corporate lending, whereas SBI or most of the nationalized banks are the ones who lend to the corporate segment. So you do remember how SBI fell when Adani saga came in. Not only that, Vijay Mallya, Nirav Modi, or all these names that comes are generally associated with the nationalized banks like SBI or Punjab National Bank and so on. So that's exactly why I'm kind of a bigger fan of HDFC Bank or IndusInd Bank or Axis Bank or ICICI Bank than any of these nationalized banks. Of course, they do offer good service, not that other way, but the only thing is, you know why. So this is something which I had to talk. So let us see how SBI reacts tomorrow. However, I am not impressed is a simple one word I would like to say. So apart from that, if you look at the market tomorrow and this week, something very special is of course the Muhurat trading. So Muhurat trading is on Sunday this week. So that's on 12th of November on Diwali, from 6:15 to 7:15. There is 1 hour of trading, which is a very special 1 hour trading. So that's something that you can actually look at. It is considered auspicious to invest on that day. And of course, we have been doing that as a ritual, at MPI family. So do plan your Muhurat investment as well. That's a great day to invest into the market. So how do you invest? Where to invest? If you need support, just come back to us. You have our number mentioned here on WhatsApp number. Just contact our team and we will meet you on a meeting. So that's it for now. Let us see how the markets react. By the way, if I had to talk about levels at this point of time, I would say at this point of time, the Indian stock market is at Nifty is at 19,230, which is very close to this 200 to 250 resistance zone. So, Nifty cross this is a big question. If that crosses the barrier, next important resistance is at 19,500, and on the top it's at 19,800. However, until 19,800 is broken on the higher side, I would say the market momentum is not that great. So we might see a prolonged period of sidewise movement that is kind of completely okay. So for this week, I am expecting the markets to kind of expire between 19,800 on the top side, and on the lower side I'm looking at 18,800. So this is the kind of range I'm looking at this point of time. I will narrow it down as the week goes by, but then of course I'll inform it during the podcast where I will be talking about it. So that's it for now, and we will catch up on Monday. And as usual, Tuesday there's no podcast every Tuesday because I am busy with my meetings at BNI, which I am a member of, a proud member of in fact. And of course, we will catch up on every other day except every other trading day and Sunday for our regular podcast. So that's it for now. This is Srikanth Rajan signing off. But before you leave, you know what to do. Yes, do press the like button if you love the content that we share, and do share the podcast with your friends and relatives to help them learn and invest better. In fact, I am now going to our MPI Invest meeting where we meet our members in person on a Google Meet at 7:30. So if you're not a part of MPI family, you will miss that for sure. But if you want to be, just connect with us and you can be part of that meeting as well. Goodbye. Have a great week ahead. This is Srikanth Rajan signing off, and also wishing you all a very happy Diwali in advance.